In a world driven by desire and the pursuit of wealth, imagine an event so bizarre that it could alter the very fabric of the economy. Picture this: a mere 60 pieces of paper, each crafted from everyday cardboard, stirs chaos across a nation, igniting greed, speculation, and ultimately a financial upheaval. Welcome to the 1993 Cardboard Gold Rush, a tale that unravels the intricate relationship between value, perception, and human ambition. Chapter 1. The Origins of Value. In the late 20th century, dollars and cents weren't the only players in the marketplace. The rise of collectibles brought forth a new asset class that captivated investors and amateurs alike. Bubbling beneath the surface, the trading card phenomenon began to take shape. From baseball cards to Pokemon, enthusiasts opened their wallets, eager to acquire the rare and the coveted. But what drives this obsession? Psychologists discuss something called the scarcity principle, which argues that people attach greater value to items perceived as rare or difficult to obtain. It is this very principle that set the stage for the unprecedented events of 1993. Chapter 2. The Birth of a Legend. As the trading card market exploded, a new contender emerged: the cardboard cards from a once obscure role-playing game known as Magic: The Gathering. Released in 1993, the game wasn't just meant for tabletop battles. It became the golden child of the card collecting community. Among its myriad cards, one stood out like a beacon of potential: the Black Lotus. This unassuming piece of cardboard could allow players to gain immense power by offering resources in seconds. However, its true power lay in something less tangible: its scarcity. Only 100 units of the original card were ever printed, and as players ripped open packs searching for the Lotus, a speculative frenzy began. Chapter 3. Speculation Takes Root. By late summer 1993, speculation turned to mania. Rare cards surged in perceived value. Breathless enthusiasts caused prices to soar overnight. An underground economy developed around these coveted cards. Think of it: a simple card could be worth thousands, and the stakes grew higher as collectors dug deeper. What began as innocent collecting morphed into fevered speculation, as if, by collecting these cards, one were collecting a piece of immortality. It wasn't just card aficionados driving this rush. Investors began to see potential in these pieces of cardboard. They were drawn to the notion of untapped wealth tied to these collectibles rather than traditional stocks and bonds. Soon, conversations across coffee tables turned into speculation sessions, with bond traders discussing their latest scores from local card shops, just as they would the latest performance of tech stocks. Chapter 4. The Consequences of a Cardboard Craze. As the summer drew to a close, the peak of this cardboard gold rush approached, and it was at this moment that the seams began to fray. With each passing day, the market saw crazier valuations. Cards that had once sold for a few dollars now commanded prices in the thousands. The excitement blinded many as they thought only about potential profits, neglecting to recognize the glaring question: how sustainable was this market? As savvy investors began to artificially inflate prices through elaborate schemes, a rift appeared. In September 1993, the first whispers of a bubble began to circulate as prices reached heights that were utterly unsustainable. Collectors eager to cash in their loot were soon left holding on to cards that rapidly deflated in value, creating a panic that rippled through both the trading card world and broader economy. Chapter 5. The Collision of Dreams and Reality. By October of that year, what had been touted as the next gold rush devolved into despair. Once valuable cards now became mere relics of a time when dreams clashed with the real world. Investors who had wagered their fortunes found themselves grappling with the stark reality that many cards were now only worth a fraction of their initial investment. Psychologists noted a phenomenon called the sunk cost fallacy, where people continue to invest in a failed endeavor instead of recognizing when to abandon it for something better. Many collectors preferred to hold on to their cards, hoping to recover the losses rather than let go of their attachment to the dream. Chapter 6. The Lessons Learned. The aftermath of the 1993 cardboard gold rush left a mark, igniting discussions about value and perception that continue today. Economists and psychologists examined the events, noting how collective behavior and social influence can distort market realities. This event serves as a case study in behavioral economics. It has implications that go beyond cardboard and into the realm of cryptocurrency, meme stocks, and the rising trends in alternative assets today. Collectively, we learned that artificial inflations and market manias seldom end well, a truth illuminated by our collective obsession over these 60 pieces of paper. Chapter 7. The Legacy of Cardboard. Despite its chaotic conclusion, Magic: The Gathering and its iconic cards continue to thrive. Today, the Black Lotus remains a symbol not just of gaming superiority, but of what can happen when fantasy meets financial folly. As of the latest auctions, some copies of the Black Lotus card have sold for over $50,000, a testament to enduring desire and nostalgia. Ultimately, the 1993 cardboard gold rush lives on in legend. It serves to remind us that what we value, whether it be money, time, or collectibles, can often be driven by emotions, perceptions, and societal influences rather than intrinsic worth. As we stand on the precipice of new investments, we must be wary of the lessons etched into those 60 cards, whose fateful clash with speculation reshaped our understanding of value and wealth. Thus, we reflect on this whirlwind of cardboard dreams and economic despair. Though grounded in a niche hobby, the repercussions of the cardboard gold rush reverberated far beyond packs of cards. Join us soon for another documentary.